today I am here to talk about new learning tips about forex markets. So please watch the full video, and if you think these tips are useful for you, do not forget to subscribe our channel, to like video and support us. Thank you, my friend. This is Ashkan, and in this video we are going to talk about entering the market at the end of trend, about FOMO phenomena and how you can avoid it. Okay, let's start. If you are a forex trader, surely you had experience to enter the market at the end of trend. It's a very bad experience. Believe me, I know it's a very bad experience because it happened to me and it happened to anyone, any trader around the world. But the worst part is that you have any other way. There is no other way that you can exit the market instead of losing your precious money. When we take buy at the highest price or we take sell at the lowest price in the market, sharp movements in up and down side can fall you into the FOMO phenomena. Before we start talking about those tips, let me define what does this FOMO thing mean. FOMO, or fear of missing out, is when the market move fast and the traders think that I lost movement, I lost opportunities, and I need to enter the market soon. And all in this situation they forget their trading plans. FOMO can be reason after many losses in the market and its psychological effect in the forex trading. I will introduce you some tips to help you avoid this effect and avoid entering the end of trend. Okay, tip number 1: when you see sharp candles, high bullish or bearish volumes, do not enter the market. Just wait, because these movements can be fake movements and or they might be start of a big trend. If they are fake movement, so it's better that you didn't enter the market. And if they are start of big trend, don't worry, so you will have enough time and you will enter the market in the correct time. Okay, tip number 2 is when you are in a bullish long-term trend, for example, and you see market goes up and up, do not enter at the highest price. Wait for correction wave. When the market comes a little bit down and you have and the market have potential to new movement, it can be good time for entering. And the stop loss can be below correction wave's lowest price. Okay, tip number 3: always look at the different time frames. Don't decide by just one time frame. Higher time frames can help you to know what is in the long-term trends. Higher time frame trends can reverse harder. So if you do trade in the long-term trend direction, you have more chance and it can be more trustable. Okay, that's all about the FOMO and end of the trend. If you have any question, you just ask them in the comments below this video. Many of our videos about how to trade in the forex market based on the people asking me questions. Also, make sure to subscribe this channel and to support us for new videos. Thank you. Goodbye.